Investors today have multiple choices, especially after the strong run we had seen in mid and small caps. Why would you recommend large caps now over mid and small caps?
Yeah. So if we look at the rolling returns, whether it's 1 year or 3 years, we have 5 year data as well subsequently. The rolling returns clearly shows a similar trend where few years the mid and small caps outperform, and then you have few years when the large cap outperforms. The purple patch is the one where the large caps outperform, and the yellow one is where the mid and small caps outperform. So on the left hand side, we clearly see that in the last 1 year or so, large caps have already started to kind of outperform. We saw in Vitri's slide as well that on a 1 year basis, small cap is almost 0% return, while mid caps are just about in line with large caps. So we've already started to see that outperformance of large caps. While on a 3 year basis, still right from that 2021 post COVID period, the mid caps have continued to outperform. So it's a matter of time if the cycle were to repeat again, the probability of large caps outperforming even on a 3 year basis kind of increases. Now, if we look at 5 years, again the story is same. Whenever the gap between large caps and the mid and small caps is very high, there is a catch up that happens. So we saw a very large gap somewhere around 2024 end, and that's where subsequently the gap has started to narrow in the last year and a half. But still there is some way to go as far as 5 year rolling returns are also concerned. So it's kind of the returning to mean, where I mean we've had a significant period of mid and small caps outperformance. We believe even valuations also reflect that large caps are slightly better than mid and small caps. Now, if we move to even on a when you look at risk adjusted basis, while the average 5 year rolling returns large caps is around 12.6%, which scores lower than a 13.7 for small caps and 16.3 for mid caps. The point is that on a risk adjusted basis, the sharp ratios as they show, clearly large caps outperform the mid and small caps. In fact, small caps perform the worst in that. So that's where the risk-adjusted returns still continue to be much better in large caps. The simpler way to understand is that at times of drawdown, large caps actually tend to outperform and kind of protect capital vis-a-vis mid or small caps. And again, one point that we've been highlighting for the last couple of years is that when you look at longer term growth, whether it's 1 year, 3 year, 5 year, the revenue growth, there's not too much of difference between large, mid, and small when you take the median. Averages can be misleading. That's where we've taken the median. And in that median, you see there's not too much to choose between large, mid, and small. What has happened in the last 4 5 years is clearly the profitability of mid and small caps from a very low point is increased, and that's where we've seen the profit growth of mid and small caps were far better. But eventually, the revenue growth has to do majority of the weight lifting, and to that extent, when you look at that number, there's not too much to choose between large, mid, and small. So even from that perspective, large caps scored decently well compared to mid and small.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.